Hi everyone, welcome back to Be Rich. We have Sashwath with us again today, and thankfully he decided to wear a shirt for you guys because last time around, quite a few of you were quite astonished at his musculature when he was in his tank top. Tank top, is it, Shashwat?
Tank top. Banyan. Tripur banyan as you
Triple
guys
bunny,
call it.
yes. So, it's to quell your anxieties, I told him, please put on a shirt. So, he's obliged and he's decided to wear a shirt for us today. I hope you enjoy the show now that he's fully dressed as per your request.
Today I wanted to talk about a US company because many of you have requested me on LinkedIn and sent me many great messages. Thank you for that. And what they've said is they enjoyed the US stock analysis a lot. So another company which is a staple in most NRI households and most households where someone goes abroad and comes back is Hershey's chocolates. And that's something all of us at some point in our life, someone has come back from the US or Europe or one of those foreign countries and given us a big bag of Hershey's chocolate in a Ziploc bag. So I've never looked at who even owned this company. And Peter Lynch, an investor who both of us follow religiously, said that you should be buying products which you know. And you should be buying companies of products which you know. And one of these companies, ITC is a buy like that, Unilever is a buy like that, Nestle is a buy like that. So is Hershey's. And we will come to look at Hershey's today. That's why I brought it to your table. And I'll quickly run you through some of the numbers. You've already seen some of the pointers which I gave you, but I'll quickly go over the numbers and let's discuss further on it. So first off, Hershey's is listed in the US. And its PE is trading at 29.63, which is slightly more pricey than what we would like it at. We usually look at companies around the 20 ballpark at most, and its market cap is $49.665 billion. It's gone up by over $10 billion in the past year. Its dividend yield is 1.67%. It was first founded by Milton Hershey in 1900, and it was one of the first companies because back in the 1900 chocolates were a sort of luxury good, milk chocolates especially. Yes, you had cocoa beans which were like directly made into chocolate, that wasn't as expensive, but milk chocolates especially was extremely luxurious, and it wasn't something which everyone could have. It was like caviar. And what Milton Hershey did was that he brought the industrial model to chocolates. So he said, this is a luxury product. There's a lot of demand for it. Not a lot of people are able to get their hands on it. So let's figure out a way where we can make it possible for the common public to have it. And what he did was he brought in industrialization. He was the Ford of chocolates even. And he brought in mass scale production machines in order to be able to produce these milk chocolates in bulk. And as supply and demand, we talked about in the honey video, which is that as soon as you're able to flood the market with low cost goods, you'll see that the price goes down. And that's what exactly happened. And Hershey single-handedly, along with a few other companies, created a huge market for chocolates then on. It's just been a skyward trajectory after that. So Hershey's biggest competitor is Mars. And Mars is a privately listed company. Although both of us have discussed it, my other uncle has also discussed it. We've looked into trying to buy Mars, but it's privately held and it's not something which you can get your hands on very easily. But there's a key point here which I'll let you explain as soon as I talk about it. When a company when such a big competitor is held privately, it generally means that they're generating a lot of free cash flow. And if they're generating a lot of free cash flow, it basically means that the company doesn't need money from outside. So could you please explain the concept of this, about why a privately held company is a good sign for the industry altogether?
Okay, Hershey's history goes way back. There's a funny thing which Hershey's, Ford, and even Heinz share. They're very old companies which have been there for a very long time.
Correct.
And all three companies have filed bankruptcies. So it just shows you the history of the company.
Yeah.
And like you rightly said, they've got a huge moat.
Yes.
And they make a product which is consumed throughout the world.
Yes.
And there's a huge brand loyalty to this. It's synonymous with chocolates, especially in the Western world, Hershey's, and you see it in all the duty frees and everywhere, what you rightly said. And it's pure cash.
Absolutely.
So everywhere which you see, financially, if you look at the financial reports, everywhere it's stellar.
Yeah.
Only problem is
Valuation. But before we get to valuation, I wanted to talk more about this free cash flow thing. Because we looked at the idea that if there's such a big privately held company in the market, then that bodes well for the entire industry.
Sure, it does. Free cash flow, everything what you say makes sense.
Yeah.
But I don't know. I feel this company is a little expensive to even do this video. What do you think about that? Is what I wanted to ask.
I'd say that yes, I'd say it's fairly
Because
valid.
what you're saying is true, Shashwath. When you talk about free cash flow, everything
Yes.
which you say is plus, plus, plus.
Yeah.
But as an investor, when you're bringing it to me and you're saying, Mama, let's buy this.
Yes,
There's only one thing I have to look at.
valuation.
Yes, is the price.
But I'd counter you with this by saying that if you do look at great companies, that's what Charlie Munger talks about. Yes, we all, being small time investors, we look at the Warren Buffett and Graham way of saying that, let's look at companies which are dirt cheap, where you buy it, it's a no brainer, you're going to make money on it. But I'd say let's flip it on its head. Let's look at amazing quality companies. This is an amazing quality company, at least in my opinion, and I'll maybe list out a few more factors why I think that is. But before we go there, I think it's an amazing quality company which may be on the upper end of fair value. So if you look at it as a spectrum and you say that this is dirt cheap, you're below intrinsic value, this entire range is your fair value, and this is your overpriced, I'd say it's somewhere on the teetering on the edge of overpriced. But I definitely think it's still a company. If it slides a few multiples, it's something we can definitely immediately buy blind, because it's a company which takes in very cheap raw materials. It produces it with very little cost, and you have you have a gross profit margin of 45%.
Agree.
It's a company which basically spews cash, and its operating profit margin, which is generally much lower for most companies, it's coming to about 20 to 25%. So this company has a model, which is why I wanted to talk about Mars, because for Mars to be able to be private, they had to generate a lot of free cash flow where the business itself provides them enough capital where they don't need to list themselves.
Yes, it's true. That does help in a free cash flow environment.
Yes.
You're absolutely right. Mars is a lovely company.
Yeah.
If it was trading, like you said, it'd probably be an amazing company to buy into. Unfortunately, we can't.
Yes.
And that's an advantage when you have free cash flow.
Yes.
You don't need to go to the public. The only reason anybody comes to the public and asks for money is because they need more money than they can generate themselves, or they want to grow faster than what they can grow naturally. So they approach the market and they ask us public as investors to invest in them and believe their model. But when you're spewing free cash like the way, same thing is true with TCS.
Correct.
For a long time it was privately held.
Yes.
When Tata's needed to unlock its value because of other reasons, they opened it up and allowed us to enjoy.
Yeah.
And we're all joined in the party and we're enjoying the buffet of Tata TCS.
Yes.
And it's nice. You're right. Free cash flow is something we all look with envy. It's owner's pride and neighbor's envy.
The interesting thing that you'd bring up the Tatas, because this company is a lot like the Tatas.
Absolutely.
And I'll let you take over on that.
No, I'll let you talk about it.
Okay.
You've done all the research. I want you to have the joy of sharing it.
Okay. So it's a very interesting company, and it uses the same model Tata's did. In Jamshedpur, Tata built up the entire city pretty much with Tata Steel and provided jobs for the people, and it also created services and public sector goods, which generally, it's an economics concept, but I'll quickly dive into it. But basically, the entire problem with an economy is that the public sector does not want to produce these goods for the general public, because there's a free rider problem. That is, if you build a park, anyone can walk into the park, and you generally can't make people pay for it. So how do you incentivize the market to give you these parks? One way is the Hershey, the Tata way, which is you build an entire city from ground up. That is, you have a barren wasteland and you have some settlements there, and you say, okay, I'm going to transform the city completely, where you let me produce, but at the same time, for payment for that, I will give you all these goods. I'll give you drainage, I'll give you electricity, I'll give you heat, I'll give you all of that in return for me being able to run two factories, which generally would be opposed. So in 1903, Milton Hershey set up two Hershey plants, which are still producing Hershey chocolates mainly, in Hershey, Pennsylvania. It's actually called Hershey, Pennsylvania.
Correct.
So this is a Tata-like company from the ground up.
Very true.
So that's also why I thought he'd like it, which is why I brought it to the table as well.
I absolutely agree.
Yeah.
It's a typical Tata-like company. You see this in Korea too, where huge companies like Samsung, which have done it. And even now, Walt Disney is having a fight with DeSantis over the same thing. It can turn into a rough turf when you have a company like this. As an investor, you have to be cautious, because as Walt Disney, as an investor, I would want Walt Disney to walk a fine line carefully. Because as an investor, I want my investment to be protected.
Yes.
I want my business model to be protected.
And it's a wonderful company.
Yeah. So that way, Hershey's is always triggered out of controversy.
Yeah.
They've never been in any controversial point.
In fact, I didn't know they were listed until I looked it up very recently.
A lot of people think Hershey's is a privately held company.
Yeah, because Mars is also a privately held company.
Exactly.
Yeah.
Most people assume all chocolate companies, for
Are
instance,
privately listed. Yeah.
And all of us assume these companies are very small,
Yeah.
and they're not.
They're not.
The usual assumption in the market is either it's privately held or it's owned by Nestle.
Yeah. But
There's only two states. An investor will always assume that it's privately held or
it's held by Nestle.
because there's a huge flood in the market of all these small-time boutique chocolate makers.
Yes.
So they've all flooded the market. So we assume these old brands are also small companies like this, but they're not. Hershey's is huge companies and it's traded. My only problem with Hershey's is, like you said, yes, Charlie Munger has said this. If it's a good business at a fair price, it's still a worthwhile investment because when you look at it over the period of time. But there also begs the question, but is it the right price to enter? I don't want it to be dirt cheap. I'm not expecting it to be like a cigarette butt or cigar butt, as intelligent investors says. All I'm asking, Graham said. So all I'm saying is it a price low enough? Or is there a correction in the horizon which you can see?
Yeah.
Because I feel right now the American market is a little stretched towards the greedy side.
Definitely.
Yeah, they seem to be going through a very greedy phase right now.
Yes.
And they seem to be just in a spirit of consumption.
Yes.
So in that kind of a market, when there's complete greed in the market, I tend to be very cautious.
In fact, 2 years ago, it was still, I'd say, a little expensive, but it was much less expensive than it was today. 2 years ago, the dividend yield was around 3%. So now you've almost halved it. The dividend yield is now 1.67%. So yes, a sort of pricey company is getting even more pricey.
Correct.
In the current market.
Correct. And if I have cash to invest, right now I would like to be like Buffett and sit on it. He's looking outside US right now.
Yeah.
Though he says America, never bet against America. He preaches how America is going to last forever.
He's betting on Japan.
Yeah. Right now, because he's got so much of free cash, he needs to make the money work somewhere.
Yes.
Right now, American market for himself, it's too expensive.
He's a behemoth. He's sitting on $120 billion of just pure cash.
Correct. So when you look at it in that analysis, out of all the shares which are available to buy, and I have a few diamond nickels to invest compared to Buffett.
Yes. He's a mini country. Like his GDP is bigger than some small countries.
Yeah. So when you look at it in that scheme of things, when we're looking at our few coins which we have on our table, you should always put your money where it works the most for you.
Yes.
Not put it where you feel like because you just feel nice to own it.
I agree.
So if I look at it in that kind of a lens, I do feel Hershey's, I have to wait for a correction. It is a stock which I'll definitely keep on my list.
Yes.
Like we have many stocks in our American market, which me and you and your uncle have put on our list saying, we definitely would love to own these companies, and we've kept in, we're waiting for the day for
a correction.
Yeah. When the market is jolted with something or another, because it always comes. These things are cyclical.
Yes.
All it takes is some kind of crazy thing to happen in Europe.
And you're not even looking for a 50% correction, you're just looking for a 10% correction. A smaller one.
Correct. And these corrections can be on a global scale. Some news can shake the market.
Or
even in a company level. Some kind of, corporate malfeasance might happen in Hershey's.
With Infosys, it happened just a few years ago when it was trading at around 600 something rupees.
Correct.
And if you bought it then, you've made enormous amounts of money.
Correct. And market always overreacts on these news.
Yes.
Like how it overreacted on Indian hotels during the Bombay terrorist attack.
Yeah.
It just dropped. Indian hotels just dropped into nothing.
IndusInd also very recently, during the COVID period, it went down to around 300 and something rupees.
Correct.
And it just tripled over that.
Correct. And you see this in American markets too, where, a certain sector can get a jolt.
Yeah.
Certain companies in a certain area can get a jolt. And immediately the market, everyone dumps it. But if you're patient enough and you're wise enough, you can pick these up. I think Hershey's will come. There will be a very opportunity in the horizon very soon for us to buy it. But at this price point, I would advise everyone to maybe just wait a little bit.
And before we close off the video, I'll just give a few more numbers for the people at home. The CAGR of Hershey's over from the year 1986 on average has been 13.08%. Its return on invested capital over the past 10 years has been 24.5%, and its weighted average cost of capital has only been 3.56%. So what this implies is that you're borrowing money at 3.56% on average, and you're making about 25% on it as a return. So this company is making about 20% of an excess on whatever the interest rate margin which they're having is about 20%, which is a huge margin. And it's also reflected in their gross profit margin, and it's reflected in their operating profit margin. And the reason why they're able to show this is because their share count is also decreasing. That is, they're buying back stock. And one underrated thing which most investors don't look at is buybacks. Because even if a company is not doing much in terms of growth, like Hershey's isn't doing, it's growing at the rate which US is growing at, because 91% of their market is in the US. But that's not the point. The point is that over the past 5 years, the share count has decreased by 4%. So buybacks can also fuel growth. This is something you guys at home have to realize and understand and internalize. Because if you don't look at whether the share count is going down, you're missing out on valuation. Because you can do discounted cash flow, you'll be keeping the amount of shares the same. But if you realize that a certain company is buying back their stock, even at a slow percent of 1% per year or like 0.5% per year, you'll see that over 10 years it makes a huge difference, and you'll end up seeing that your returns are boosted by some 5-10%. So you might have thought that the company is overvalued, but it's actually very, very undervalued, because the company is using its free cash flow to extinguish stocks.
Correct.
This is a good concept for people at home to remember.
Very true. That being said,
Yeah.
nothing in this video is of investment advice. None of this information we shared with you is about buying it or selling it. We're not telling you any kind of way to invest or not invest. All this information we have is all public information. It's not some special
Yes.
information we have gathered from anyone.
All you have to do is go to the 10K reports and see it for yourself.
Correct. And we wish you the best of luck in your investment ventures. But please do keep in mind our conversation is purely intellectual and nothing more.
Yes.
So thank you again for joining us today on Be Rich. I hope you found this video informative and entertaining as always. If you do like our channel, please do think of subscribing to it and turning on the bell notification icon so you may be notified every time we come up with a new video. And do share your thoughts and feedback in the comments below. We do read them. As you've noticed, Sashwath has a shirt back on. Thank you.
And one more thing, if you want to see specific US company analyses, do drop companies which you think are value buys in the comments, and we'll definitely take a look at it. And if it's something worth talking about, I'll definitely bring it onto the platform so my uncle and I can chat about it for a while.
Best of luck.
Yeah.
I'm in Tokyo on work on the 5th of August 2023. I have a lot of following in Japan, Tokyo. Those who want to meet me in Tokyo on 5th August, kindly drop me an email on the address given below or contact us on WhatsApp there. My team would get in touch with you and facilitate the meeting. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.